presentation of Financial Crisis Recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets.
Buying gold or silver as a hedge against inflation. They might be doing some commodities at $10,000 or $20,000. That's the type of thing that they're doing. They're not moving $300,000 to us and are all in, which is exactly correct. They're just moving enough to get a different asset allocation. All of these different types of investments move at different times, and the rates of returns are all different. And so the whole strategy about having a correctly built retirement plan is asset allocation and diversification. Stocks, bonds, and mutual funds by themselves are not asset allocation and diversification. You need multiple different types of investments to weather the trends and the ups and downs in the marketplace. So it's really a tippy toe. So there's a learning process for him here. He would need to take some time and learn about it and decide what type of investment he would want to do, and tippy toe into this marketplace. But with the kind of money that he's got, even if he move 50 grand into a self-directed, he'll be probably making more money than he currently is now. But only he could decide and determine his comfort level. The worst thing he can do, I tell all my clients, you have to Nike it. You eventually have to do something.
So really what we're talking about, Jason, is when Todd Grill's talking about diversification, he's talking about uncorrelated asset classes that are completely separate and different from one another. So when market segments change, if our market S&P goes down as a whole, it really doesn't matter how diversified you are. However, you can be invested in other investments that are non-correlated assets like real estate, like gold, like other things that could actually give you more diversification than you currently have. I want to be very clear, we're not giving investment advice on this show, and I don't want to get even into that barrel. But what I do want to say is those investment opportunities are all available to you through utilization of a retirement account. If you'd like to know more, Jason, I'd encourage you to simply email me, and I can get you in contact with somebody who can help you achieve your objectives, pursue those objectives. You can email me at todd@asktoddrooker.com. That's last name is Todd, TODDROOKER.com. So Todd@asktoddrooker.com. And Jason, I'm going to let you go here, but by all means, if we can be of help to you, we look forward to doing that very thing.
Okay, thanks very much for your help.
Very welcome. Very welcome, Jason. All right, so let's keep going here. Todd, let me ask you, what is, you said something to me that I found to be very intriguing. What is a self-directed checkbook IRA LLC? What in the heck does that mean?
Well, yeah, it's a marketing term that companies around the United States are really starting to promote. It's not a legal terminology. It's an investment vehicle. An LLC, limited liability company, is an entity. And the IRS allows IRA money or these different types of IRA accounts to be invested into an LLC, a limited liability company. When that is done through an administrator such as ourselves, that gives more control or total control to the IRA holder to totally direct those funds and facilitate those funds outside of the administrator. The account is still with an administrator. The IRA has invested into the LLC. So the client, IRA holder, then has the responsibility and fortunately the control to be able to totally self-direct those investments on their own. They avoid paying some of the fees to us for funding some of these investments. So it's a great opportunity. And when they say checkbook control, that means the LLC has set up a checkbook bank account at the client's favorite bank, and that's where their IRA money goes into, and then they facilitate that. So it's a marvelous opportunity and strategy for the person in the know and the person that has a good attorney that understands how to set up these LLCs. I've been doing this for 10 years, and there's not an attorney I've talked to in the 10 years that I've done this that understands how to correctly set up an LLC when an IRA is invested into it, unless they've been instructed by me.
Well, hey, very good. And I think that the concept of checkbook is probably one that was created to essentially give a person an understanding of how it actually works. Because my perception is, okay, look, Todd, I'm in business for myself. I've got let's say a small, closely held corporation, maybe 10 employees. I've got my own self-directed retirement account that we manage for myself and my employees. And with that so-called checkbook, and I think that, again, that's more of a perception and a conceptual idea, I'm able to use my retirement account. And if you owned a company and you were taking your company public and soliciting investors through, let's say, an IPO process, an initial public offering prior to actually taking that company public, I could take my retirement accounts and I could write you a check to invest into your company. Is that kind of the concept?
Absolutely. That's called a private placement. Wouldn't you have loved to have been invested in Google and Yahoo and
Apple stock?
Apple stock, exactly right. They were all privately held companies, and these opportunities are available all over. Minnesota is one of the hot states for hotbeds for entrepreneurial, and there's so many people starting up their own business, and you could take your retirement account and invest it into their company as a privately held stock, and when that turns around or goes IPO, that's how you make your money.
Yeah, I can tell you, when you talk to your own financial advisor, the idea that you're going to take your money out of the American funds or the Fidelity funds and invest in an IPO is not even on the radar screen.
No, and they don't understand that anyways.
Nor would they want to, because that takes it out of their control and the assets under management. And look, I'm not begrudging anybody in that business, because they do a good job, they make their money, and that's okay. This just gives you access to things that you ordinarily wouldn't have. Question I have for you, Todd, is how does the IRS feel about these types of accounts?
Well, here's what I tell everybody. I love the IRS. I'm so fascinated by their rules. Part of the problem I don't like about the IRS is a lot of those rules are very nebulous, and it's hard to understand. They do that on purpose. But the IRS has actually no issues or problems with any of these self-directed accounts. The IRS lists about 6 or 7 things that you can't invest in using a retirement plan. Life insurance on yourself, collectibles, antiques, gems, historical objects, musical objects, things like that. Other than that, everything else is fair game. And on the IRS website, if you go to the irs.gov and click in real estate in retirement accounts, it'll give information and questions basically stating that it's okay to buy real estate or these other assets inside retirement accounts. So concerns the IRS is contributing to retirement accounts, or not taking correct required minimum distributions, or not doing the conversion correctly. So they're not these self-directed accounts are not on their radar screen because they're not worried about them at the least.
Well, having said that, I'm going to jump all over this, Todd. I am utterly aware of exactly what you're saying, and I'm going to define that and summarize it just a little bit more closely here, which is to say that they don't tell you how to do it. They simply enforce the law.
Correct. Very true.
Which means that if they're not going to tell you how to do it properly, but if you screw up, they'll be more than happy to tell you when you're doing that and to jump all over it, which is why you want to work with somebody who really knows what they're doing. Todd Grill with Nexus Direct has been doing this for over 10 years. We also have what I consider to be, and that's why when you come to see me, it's fortunate because I spent over 20 years researching and finding the very best professionals to work with. I don't get my referrals off the bulletin board at the coffee shop, and I don't smile and dial in the phone book. I know everybody in this industry. And so when we connect Todd with a client and then hook them up with whom both, I think you and I both, Todd, agree, Tom Fofinski at Vertus Law,
yes,
probably one of the best asset protection estate planning attorneys in the state, if not the best. And between the two of you, we can set up a structure that can be defended and can be utterly successful and give you all the options that you're looking for. So, doing it properly, doing it with the right people insulates you from anything going wrong. And, when you do that, the options just become enormous and available to you. So how does someone do the due diligence for IRA investments? How are they going to determine, if this is right for them, all the implications and ins and outs, some of which we've been describing on the phone, Todd? How would they go about doing that?
I think understanding and knowing how to do due diligence on any investment, whether it's in a self-directed retirement account or not, is one of the most difficult things for a client to do. And you mentioned Tom Fofinski. I think you're absolutely correct. He's one of the smartest, creative of business attorneys that I run into, and he totally understands the self-directed retirement accounts. We've had many consultations and talks, and I'm just amazed at how his understanding of this. He'd be the type of a person that a client would go to do due diligence. I'm an investor for 30 years myself, and I consider myself to be very experienced and smart. But whenever I focus on an investment for myself, I get blinders on. I check in with all of my different advisors and circle of trusted advisors to make sure that I am on the right path, doing the correct thing. So I would encourage all clients to have somebody such as Tom Fafinski as their attorney. They should just call him anyways. I mean, just to have a consult with him. So, but doing the due diligence is just checking in with as many different sources as possible. We have companies that we work with that are look for these fraud alerts, these Ponzi scheme fraud alerts throughout the country. So, and you would only have access through that. One of the things that the listener has to understand is they will not get access to these critically smart and educated advisors unless, like you just mentioned, they're not on a bulletin board. These advisors who are at the top of their class, they only accept referrals.
Yeah, sophisticated investors, and they're actually under IRS guidelines. Qualified and sophisticated investors typically are not going to go with the watered down mutual fund. They're going to do due diligence. They're going to deal with people such as the ones that I'm describing. I've got many of these clients whom are my clients and have been enormously successful. But trying to find that network of people is not an easy thing to do, and you could search for a lifetime and not get the information because, as you said, the average investment advisor isn't engaged in that world in many cases. So it's just not their client. Their clients are employees, not the business owners who run the businesses and invest in the other businesses as IPOs and things of that nature. So ironically, as amazing as it can be, Tom Fafinski actually has a program where you could actually use a self-directed retirement account to own and buy a business, believe it or not. So the investment of the retirement account actually is the ownership of a business. Now, we can obviously say when you buy stock in any business, you are in effect an owner of a business. But imagine actually being an owner buying a business with a retirement account. Pretty interesting concept. We're going to talk about that when we come back from the break. I'd also like to encourage our listeners to call in with any questions after the break. That number is 651-646-8255. Also want to encourage you to download the Financial Crisis Bible. That's www.financialcrisisbible.com. And we will be back talking about self-directed retirement accounts with Todd Grill from Nexus Direct. Welcome back to Cover Your Assets. We are here with Todd Grill talking about self-directed retirement accounts. It can be used for purchase of real estate, purchase of business, purchase of gold, silver. You direct it, all under the IRS guidelines, which are varied and give you a ton of options that would not ordinarily be available. And we could go so far as I've said, to actually invest in a business. Now, obviously, that has to be done properly with the guidance of an attorney, and it depends on where you are in your life path and where you are in your investment path. What are some of the differences